Hi, I'm Vince Molinari, and welcome to FinTech TV's The Impact. We're broadcasting again from the iconic New York Stock Exchange, and I'd like to welcome with us today Peter Fusaro, who is the founder of the Wall Street Green Summit. Well, before I jump in here with Peter, I want to tell you a little bit about his background. Peter is a New York Times best-selling author, prolific writer and speaker on sustainable finance, and a pioneer in carbon markets and ESG investing. He brings almost 5 decades of experience in remediating environmental problems, particularly air quality. With that starting point, Peter, welcome.
It's a pleasure to be here, and particularly the greening of Wall Street begins today.
What a perfect juxtaposition as we have the iconic New York Stock Exchange, Wall Street right outside, leading right into the Wall Street Green Summit. Just excited about this conversation, Peter.
And the SEC now moving today on the proposed rules for climate risk on the balance sheet. This is a big deal.
Well, so let's take a step back and come right forward, because you've been at this for decades. And today's got to feel so epically different than just even a couple of years ago, particularly when you bring forward the SEC.
It's very gratifying to see that we finally reached an inflection point in the markets. In the last 2 years, my phone has been ringing off the hook literally on 2 things. What is ESG reporting and investing, and why are carbon markets important to the E in ESG? So yes, I've worked for 5 decades on this. It's great to see the uplift now.
Well, when we go to that and we think about perhaps markets differently, and I think we're seeing so much more recognition of climate risk within our financial service systems, our capital markets, and our companies. How do you see that today?
I see that some companies are going to get ahead of the curve. They're going to look at sustainability reporting. They're going to do much more than reduce emissions through operational efficiencies. They are going to actually be moving very further downstream into clean energy. And particularly since I have worked in the energy patch, we're going to see oil and gas companies move to sustainability, to clean energy, to divestment of some of their upstream assets, that's oil and gas. And that's already begun, but this decade is kind of when the rubber meets the road. We need to do it now. We need carbon neutrality by 2030.
So let's go back to that in 1 second. I want to bring forward the Wall Street Green Summit. So today, as you're talking about rubber meeting the road, and what's different about the summit now? You started this convening decades ago, really education, awareness, that great visibility, and now it seems to be that it's really moving to real action from the knowledge standpoint. And how do you pull that all into this year's Wall Street Green Summit?
Yes, you're right. Initially, we had clean tech, which had fits and starts, carbon trading and finance, which had fits and starts, and now I see the beginning of a market transformation, decarbonization, the energy transition, carbon neutrality out there as an outlier in 2050. So actually, the way the summit works, I bring in practitioners, solution providers, not theorists, not research papers, so people that are actually doing the remediation, who have the knowledge, and it's very varied. It could be such things as saltwater agriculture or solar farms or decarbonization. So the reality is we look at different metrics on how do you get this done. It's not just, oh, I'm going to have a wish list of a checkbox. So at the summit, you learn from 50 practitioners who actually are doing this day to day.
So I love it. Actuality versus aspirational perhaps being the defining point. Why is this all happening now in such a bigger way?
My own theory is, and I was at Earth Day 1970 with my solar power t-shirt at Carnegie Mellon University in Pittsburgh, I actually think this is the baby boomers' children, that they have embraced sustainability. And it's not a political decision, Republican, Democrat, liberal, or conservative. It's a global phenomenon. I've been to 50 countries. Young people are particularly engaged on sustainability. And if you're going to be in the corporate world and hiring young talent, you better be doing the green dance, not the green wash. And so they want to see their companies doing the right thing. I'll give you an example. Corporations in the last 3 years are purchasing renewable energy, and there is absolutely no mandate to do this. They're doing this volitionally. Why? Because they want their young employees to feel good about this. And this is a generational shift.
Well, I want to touch a little bit more on that as you talk about a generational shift and pulling that forward to the present. The next generation seems much more engaged as stakeholders and not just shareholders, consumers in organizations that they believe in and trust, and therefore becoming shareholders. So you made the point about not being greenwashing, right? So the organizations that have true DNA, that are committed to being responsible, whether that's ESG, whether it's proper supply chain, diversity across the state, seem to be getting better valued and rewarded in the capital markets and also having outperformance.
I totally agree with you, but it's the beginning of a market. I see this as the beginning of sustainable finance, the beginning of real global carbon markets, the beginning of a movement to sustainability across the board. And it's taken decades and tens of thousands of very good people who people really don't know that have really been seminal in catalyzing this shift.
Right, Peter, so maybe I should have jumped into this a little bit earlier. We're always about education awareness, so we talk about carbon neutrality. For our viewers, what does that actually mean?
Well, realistically, most corporations on the planet are not going to be carbon neutral by 2030. The easy low-hanging fruit is using operational efficiencies, but realistically, technology cycles are so long that they're going to have to buy carbon offsets. And there's two kinds of carbon offsets that are premier. One is renewable energy, and the other is forestry. 41% of carbon offsets in 2020 were from the forestry sector. That's reforestation, afforestation, planting trees, not harvesting trees. And the reality is you need to bulletproof that with the best standards, such as Vera and the gold standard. You must have third-party verification companies like DNV out of Norway, TUV out of Germany, or SGS out of Switzerland, who verify and then validate. Because my thinking is, if you don't have superior carbon credits, you're going to be subject to a lot of criticism in the markets. And in the UK, they talk about dodgy carbon credits. The reality is, most companies cannot be carbon neutral. And I work with energy companies, which are the dirtiest polluters on the planet, who have the biggest footprint, and they're going to be buying offsets in droves. There are also emerging markets, such as biodiversity credits and blue carbon, that's ocean space, kelp beds, et cetera.
Great. So let's talk about balance sheets, let's talk about corporations, let's talk about the SEC mandates coming up. What impact does that have, and how does that play out as if this is the beginning of sustainable finance?
Most of my work is on the E of ESG, environmental. That's the emissions footprint. How do you remediate emissions? That can be measured by carbon accounting, that can be validated and verified, but you really have to understand that the markets right now are very confusing. There are 65 mandated carbon markets on the planet, so California being one, the EU emissions trading scheme being another, and then there's this emerging voluntary market, which just passed $1 billion last September, but most of us size that market at 95 to 100 billion by 2030. So there's a lot of movement. There's a lot of movement now in carbon development. So you need carbon developers, such as South Pole, who are hiring many people to do the heavy lifting. This is not science fiction. This is science-based emissions reporting, registration, validation. But because of that, they're going to have a higher pricing in the market. So today, carbon credits could be as low as $2 to $3 a metric ton, or $1,000 a ton, like Stripe paid for carbon capture and storage. So I have seen this market shift before. The beginning of the market, price discovery is all over the place. It's very chaotic, but there'll be harmonization, there'll be global standards. This is all moving. This was envisioned in the Paris Accord, but we're not there yet.
But getting closer.
Much closer.
Great. Peter, as we close out, let's talk about the Wall Street Green Summit again. I believe that, yes, March 28th through the 31st. I know you have an incredible lineup coming. Is there any folks that you could talk about and highlight here? I know there's so many.
Well, basically, I want to just say that the summit is all on Zoom. It is virtual, it is global. We have speakers from Singapore, Israel, South Africa, London, Paris, Brazil. One I'd like to highlight is Mike Wallace of Persephone. Persephone, in my opinion, is an elegant carbon accounting solution. Mike has been in the sustainability vineyards for a couple of decades. So I've actually reached back to some really old hands that know what they're doing and now are platforming how to do it, because this is not simple. If it was simple, everybody would do it. You need specialists, you need the experts. So we're looking at a host of different solutions, from plastics in oceans to sustainable agriculture to veg tech to many different types of schema. So it's not one size fits all, and the summit is diversified. It's not one conference, it's many little conferences.
Wonderful. How do people register?
Very simply, go to www.thewallstreetgreensummit.com. Just Google it and you can register. Thank you very much, Vince, for this opportunity.
Pleasure having you, and thank you for all the great work that you've been doing and continue to do, Peter.
You're welcome.